Okay, welcome back. So in the last video, we did all the workings, the calculations for the provision for depreciation on vehicles account. And so in this video, we're going to start the actual T account, the provision for depreciation account. So I've just drawn the lines out here. And first of all, we'll give it its name. Provision depreciation account. Okay. Now the provision for depreciation account, the balance brought down at the start of the year goes on the right hand side or the credit side, the opposite side to the balance brought down in the vehicle account. So since we want the provision for depreciation account for the 2 years 2000 and 2001, we're going to start off with, on this side, 1st of the 1st 2000, so 00, balance brought down. And the balance in a provision for depreciation account is always the total accumulated depreciation on all the vehicles that you own to date. So up until this date, we'll say, up until the 1st of the 1st, 00. So from our workings here, we worked out all the depreciation from 1996, 97, 98, 99. So all of that together, the total depreciation up until the start of the year 2000 is 95,850. So that's our balance brought down, or our total at the start of the year 2000 in our provision for depreciation account. So that's 95,850. Okay, that's the first item. So that's where the way our depreciation account starts. Now our depreciation account will increase, or the amount, the balance in it will increase every year as we work out our annual depreciation on vehicles for that particular year. And if we're increasing, we're going to be putting figures on this side. If we're decreasing the amount in the provision for depreciation account, we're going to put our figures on this side here. We'll call it the minus side. Now, the only way that the depreciation account is going to be decreasing in this particular question is if we dispose of a vehicle. Because if we get rid of a vehicle, then we don't want to have any information related to the depreciation of that vehicle in our depreciation account anymore, because it's not our vehicle, its depreciation shouldn't be on in our accounts anymore. Okay, so if we look at what happened in the year 2000, we had on the 1st of the 4th 2000, vehicle number 3 was crashed, and disposed of and traded in. So we got rid of vehicle number 3. So we are going to have a disposal on the 1st of the 4th 2000. So on this side for disposals, 1st of the 4th, 00, disposal. And we want to take out any depreciation that we'd already put into our accounts that had to do with that vehicle that we disposed of. And that vehicle is vehicle number 3. And this is where we go back to our workings again. We look at the line for vehicle number 3. We added up all the depreciation up to and included that time in the year 2000 when we disposed of it, and that came to 24,375. Now we want to take that 24,375 back out of our accounts. So down here, 24,375. On the other side then, for the year 2000, we want to put in our total amount of depreciation for that year, and we put it in at the end of the year, and the total amount for the year 2000 is this 36,825, okay, including that last little bit for vehicle number 3, which we're taking out again on this side. We're putting it in on this side of the account, and then we're taking it out here because it's both that 2925 is included in the total that we're taking out, and also it's included in the part that we're putting in here. So when we're adding to our aggregate or our total depreciation figure, we say, first of all, we put down the end of the year as the date, 31st of the 12th, 00, and we always say profit and loss because our annual depreciation is entered as an expense in the profit and loss account, and that was 36,825. Okay, so we're going to tot that up, and we're going to do it by adding up the bigger side, which is obviously this side over here, and that total, because I've done it already, comes to 132675. 2 675. Should be the same total over here. 2675. And then we say to ourselves, well, what has to be entered here to be added to that to give us this? In other words, we subtract the disposal amount from this to get our balance carried down at the end of the year. 31st of the 12th, 00, and that works out to be 108,300. And that balance at the end of the year is our total aggregate depreciation at the end of the year 2000, which will be the same as our total aggregate depreciation on the very first day of 2001. So that becomes our balance brought down for the following year, 2001, 108,300 over there. So that's 1 year's done, and we're about to start the second year. We've got a good start made there. And again, it's the very same thing. We look at what happened during the year. On the 1st of the 8th, 2001, a vehicle was traded in, so it was disposed of, and it was vehicle number 1 this time that was traded in, but it had a refrigeration unit attached to it also, so we did dispose of both of them at the same time. So again, it was the 1st of the 8th, 01, 1st of the 8th, 01, it was a disposal. Okay, the amount of the disposal is the total amount of depreciation that we'd already added up in our accounts or added into our depreciation account from those vehicles that we're disposing, our vehicle and unit. So it's all of this 55,275 and all of this 13,400. So if we add the two of them together, our disposal comes to 68,675. And again, our next entry is just going to be our depreciation for the year, which we enter at the end of the year, 31st of the 12th, 01, and that goes in as profit and loss because our annual depreciation gets entered as an expense in the profit and loss account. And again, if we're looking for the depreciation for 01, well, the total depreciation was 38,000 when we added up this column. So 38,000. And then we just need to add up the bigger side, which is again going to be the credit side here. I'm going to say that's 146,300. And that has to have the same total as over here. And then on the 31st of the 12th, 01, we'll have a balance carried down of whatever we need to make this and this add to 146,300. In this case, it's 77,625. And if that's our balance carried down, it's going to be our balance brought down at the start of the following year. So first of the first, 02, balance, brought down, 77,625. And that's the provision for depreciation account.